Hi, good morning and welcome to today's morning report on Monday, the 30th of November with me, Japan market analyst at Antec Markets. The European trading sessions fairly sort of mixed at the open really. It started off a little bit lower on the back of weakness out of Asia actually. No real steer from the Wall Street markets on Friday. They were still on fairly quiet mode following on from Thanksgiving holiday, but Asian markets slightly lower today, but no real major fundamental news to talk about, other than the fact that we've had news that apparently the IMF are set to accept the Chinese yuan into the SDR, the special drawing rights basket that it has, and that should sort of pave the way really towards the using of the yuan as a sort of a global currency, really, and it's going to take several months. It's actually going to be Q3 2016 apparently before it actually starts to properly trade in the SDR. But still, it's going to have an impact presumably on that currency, and quite how the impact plays out remains to be seen. But certainly there will be an impact. At the moment, fairly mixed outlook for the yuan today, but across the board, in terms of the forex majors, we're still seeing dollar strength. We've still got this US dollar remaining strong as it has done for the past few weeks, moving up towards that 100.4 key resistance, which is that March high that we saw on the dollar, and it seems to be moving up towards that. The strength in the US 2-year yield has continued today, and also the 10 years started to push higher as well. So both of these should be supportive of a stronger dollar, and that's pretty much what we're seeing. We're seeing euro weakness, we're seeing sterling weaker today, also the yen is weaker, and only really the Aussie and the Kiwi are forming any real support against the dollar today. But certainly at the moment the dollar bulls are still in control. Gold is lower, oil is lower, so pretty much across the board dollar strength apart from those Aussie and Kiwis. So, what are we looking out for in terms of economic data today? Well, again, there's not too much. Actually, we start off a pretty hectic week on the economic data front, on a quiet mode. Actually, we've got the German inflation, the German HICP, the preliminary reading of that. That's at well, throughout the morning from the regions, but actually you get the countrywide data at 1 o'clock this afternoon. Expected to actually come in at plus 0.3, so again an improvement. That would be 2 months in a row of improving inflation there in Germany. And then at 3 o'clock UK time, we've got the pending home sales for the States, expected to come in at plus 1.5%. But it's a pretty quiet start to what is actually going to be a fairly hectic week. And I will obviously talk about that as and when it happens through the week, starting tomorrow with the PMI data. So, my chart of the day actually is the Aussie dollar. Now, we've got the RBA reporting monetary policy tomorrow morning, early doors, and what we have is the Aussie falling in front of that. We've actually been in this small uptrend over the past 3 weeks, but falling back towards the uptrend. But look at these momentum indicators. We're starting to see a sell signal coming through on the stochastics. We've had the crossover. It looks like it's now confirming on a move below 80, so that would be a bearish signal in front of the RBA. Interesting that the RSI is back towards 50. 50 tends to be a bit of a level, doesn't it, on the Aussie. So if it started to fall below 50, I think that would also suggest that perhaps we're in this correction mode. And what I've got here is that a bit of a reaction low, not a key one, but 71.57 was a reaction low last week. And if it falls below that, then I think that would be sort of continuing back towards sort of the next real supports that come in around 70.67, which we saw a couple of weeks ago. But certainly at the moment, the correction is sort of holding up. It's actually okay, but you are still seeing on the hourly chart, for example, a bit of a negative trend there. You've got negative configuration on the momentum indicators. Certainly if that trend line continued, that RSI, that little rally that we've seen today, up from 71.68, which was close to that support, about 30 odd pips of rally that we've seen today, that could be seen as a chance to sell, and certainly in keeping with the recent days where we've seen little rallies that get sold into on the Aussie. This could be again another chance. Momentum indicators negatively configured, also the moving averages are rolling over as well. So it's interesting that we've seen this little pop in front of the RBA, but the RBA is not actually forecast to move on rates today. So it'll be interesting to see if they come out with any sort of dovish statement as well. But certainly in front of the RBA, the Aussie remains as it has done in the last few days, pretty much under a little bit of pressure. And this little rally, I think, could be a chance to sell. So below 71.57, we're looking at these 70.67 support back there. Now, in terms of the resistance on the upside, you're looking out for 72.40, which is several sort of reaction highs that we've seen as a historic level, really. And then above that, 70.60. Sorry, 72.60 and 72.83. So a few levels for you to work with there, but certainly I think this Aussie is still in a little bit of a correction mode in front of the RBA, and we could well see a bit of downside in due course. So I wish you good luck in your trading on the Aussie, and I will speak to you later. Thank you.